Hey everyone, and welcome back to Stock Talk.
Great to be here.
If you're finding these deep dives useful, maybe hit that like button, subscribe, share it around. It really does help us keep doing this.
Yeah, absolutely. Every bit helps.
Okay, so let's dive right in. We've got the Shopify Q1 2025 earnings report hot off the presses.
Right. And we're going to, cut through the fluff and get to what really matters for understanding where Shopify stands now and maybe where they're headed.
Exactly. Get straight to the point.
So the big headline number that jumps out immediately, that 27% year-over-year revenue growth, they pulled in $2.36 billion in Q1. That's pretty exceptional.
27%. Wow. Okay.
Yeah. But it's not just the top line, right? They're also showing strong profitability. They hit a 15% free cash flow margin.
15%. And is that like a one-off thing or?
No, not at all. That's actually what's quite interesting here. This is now, I think, 7 consecutive quarters they've had double-digit free cash flow margin.
7 quarters. Okay. And get this, 8 straight quarters where their pro forma revenue growth was 25% or more.
Right. So consistency, it suggests this isn't just a fluke quarter, it's a pattern.
Exactly. It points to a really solid underlying business engine, sort of maturing and scaling efficiently.
And it's not just about Shopify's own numbers, right? It also tells us something about the merchants using the platform.
Absolutely. That's where the GMV figure comes in gross merchandise volume. It hit $74.75 billion.
75.
Yeah, which is up a solid 23% year over year. That tells you the businesses on Shopify are growing, they're selling more stuff.
Which in turn fuels Shopify's own growth, especially with merchant solutions.
Precisely. And that GMV growth at 23%, since the 7th straight quarter, they've seen GMV grow by over 20%. So sustained strength across the whole ecosystem.
Okay, let's break down those financials a bit more. Revenue, $2.36 billion, up 27%, you said, or 28% if you adjust for currency effects.
Correct.
Where's that growth coming from mainly? Subscription side or the merchant side?
It's coming from both, actually. Both subscription solutions and merchant solutions performed well. But merchant solutions was definitely the powerhouse this quarter.
Yeah.
That segment grew 29% year over year, 30% if you look at constant currency.
Wow. So people are really leaning into things like Shopify Payments, Shopify Capital.
Exactly. Those services tied directly to sales volume and merchant operations are booming.
Right. And that GMV number, $74.75 billion, up 23%, reflects that activity. But then gross profit, $1.17 billion, was up 22%. Slightly less than revenue growth.
Yeah, a little bit less, which kind of hints at the mix shift towards merchant solutions, which naturally has a lower gross margin profile than the subscription side. But still, 22% growth in gross profit dollars is very strong.
Okay. And then moving down the income statement. Operating income.
Now, here's where things get really interesting, I think. Operating income surged. It was up 136% year over year, hitting $203 million.
136%. That's a massive jump.
It is. And look at the operating margin. It went from 4.6% in Q1 last year to 8.6% this quarter.
So much more efficient operations. They're keeping more of that revenue.
That's exactly it. They're not just growing, they're growing more profitably. And that free cash flow number we mentioned earlier, $363 million, up 56%, really underscores that point.
Now, I saw something about a net loss in the report, but also a pretty healthy adjusted net income. Can you unpack that for us?
Yeah, that's an important distinction. So they reported a GAAP net loss of $682 million. But, and this is key, that was mostly driven by impacts from their equity investments, mark-to-market stuff, non-cash.
Okay, so volatility in investments they hold.
Right. If you look at the adjusted net income, which strips out those kinds of items and gives you a better look at the core business performance.
Right, the actual operations.
Exactly. That adjusted figure was $226 million, up a very healthy 57% from last year's $144 million. So the underlying business is performing really well.
Got it. That makes sense. Let's talk about those two main segments then. Subscription solutions, that's the core platform fee, right? $620 million revenue.
Yep, $620 million, up 21% year over year, 22% constant currency. Makes up about 26% of total revenue now.
And what's driving that growth? Just more stores signing up?
It's a mix. Definitely new merchants joining the platform, but also existing merchants upgrading to higher plans like Shopify Plus as their businesses grow.
Oh, okay.
You see that reflected in the monthly recurring revenue, the MRR. That hit $182 million, up over 20% from $151 million last year. It shows that sticky subscription base is still growing nicely.
And that segment has great margins, right?
Oh, yeah. Fantastic margins. Gross margin there was 80.2%. Very profitable.
Okay, then the bigger piece of the pie, merchant solutions. $1.74 billion in revenue, up 29%, making up nearly 74% of the total.
That's the one. Includes payments, capital fulfillment, point-of-sale hardware, all that jazz.
And the strong growth here, what's the big picture significance?
But it really shows how Shopify has evolved beyond just being a website builder. They're embedding themselves deeper into the merchant's operations.
Becoming more indispensable.
Exactly. And this strategic implication is fascinating. As this segment grows, even with its lower gross margin of around 38.6% this quarter, Shopify's success becomes even more directly tied to the sales volume, the actual success of their merchants.
Right. Their interests are very aligned. If the merchants sell more, Shopify makes more from payments processing and other services.
Precisely. It creates this really powerful flywheel effect.
Okay, let's shift gears to expenses. You mentioned improved efficiency. How did that play out?
Yeah, this was a key theme. Total operating expenses only grew about 10.9%. Compare that to revenue growth of 27%.
Much slower.
Much slower. That's what gives you that operating leverage. OpEx as a percentage of revenue dropped significantly from almost 47% last year down to about 41% this quarter.
And where did they find those savings or efficiencies?
Well, if you look at the breakdown, sales and marketing spend was up 12.2% in dollar terms for 100 LNM, but it actually decreased as a percentage of revenue. Same story for R&D, up 12.5%, 377 revenues, but down as a share of revenue.
So still investing, but getting more bang for their buck relative to revenue.
Exactly. And general and administrative, G&A, actually saw a significant decrease in dollar terms, down 12.1% to $109 million. Yeah. That really reflects some disciplined cost management, maybe some synergies from past actions.
Okay. What about things like loan losses? With Shopify capital growing?
Good point. Transaction and loan losses did increase quite a bit, up 47.1% to $75 million. But that's somewhat expected, right? As their financial services like capital grow, you'll naturally see potential losses scale alongside that volume. It was about 3.2% of revenue.
Something to watch, but understandable given the growth in lending.
Definitely. And even stock-based compensation, while up slightly in absolute dollars, 114 versus 195, it also decreased as a percentage of revenue. So overall, a picture of disciplined spending.
Which leads to better cash flow, presumably. How's the balance sheet looking?
Very healthy. They ended the quarter with $5.51 billion in cash, cash equivalents, and marketable securities, slightly up from the end of 2024.
Solid cash position.
Very solid. Net cash from operations was strong at $367 million, up over 50% year over year. And that feeds into the strong free cash flow we talked about, $363 million, 15% margin.
Right.
You also see the growth in Shopify capital reflected on the balance sheet, with loans and merchant cash advances increasing to about $1.39 billion net. Overall, total assets of $13.4 billion, liabilities relatively low at $2.35 billion. Gives you shareholders' equity of over $11 billion. It's a robust foundation.
So financially strong. What about strategically? What are they focusing on to keep this momentum going?
They highlighted a few key areas. Product innovation is always big for them.
Yeah.
Things like commerce components for larger, more complex enterprise clients.
Right, targeting bigger businesses.
Exactly. Also Shopify Collective, which seems to involve AI, maybe helping merchants connect or manage things better. Continued improvements to Shop Pay to make checkout smoother, and enhancing Shopify markets for international selling.
Makes sense. Anything else?
Yeah, a big focus on merchant success generally. Better onboarding, support, growing their partner ecosystem, the App Store. Harley Finkelstein, the president, had a quote something like, "We built Shopify for times like these," emphasizing how they handle complexity for merchants.
So doubling down on the core value prop.
Pretty much. Plus, continued pushes into international markets and expanding their B2B commerce capabilities alongside that enterprise focus.
Okay, looking forward then. What did they say about Q2 or the rest of 2025?
Yeah.
Any guidance?
They gave specific guidance for Q2. They're expecting revenue growth in the mid-20s% range year over year. So still very strong, maybe a slight deceleration from Q1's 27%, but solid.
Mid-20s. Okay.
They see gross profit dollars growing in the high teens percentage range. Again, that implies maybe a bit more margin pressure, likely from that merchant solutions mix continuing.
Right. Consistent with what we discussed.
Yep. They expect operating expenses as a percentage of revenue to be around 39% to 40%, so continued efficiency there. Stock-based comp around $120 million. And free cash flow margin also in the mid-teens, similar to Q1.
So basically projecting another strong quarter, balancing growth and profit.
That seems to be the message. No specific full-year guidance was given, which isn't unusual, but management sounded pretty optimistic, even acknowledging the sort of uncertain economic backdrop.
Okay. But every company faces risks, right?
Yeah.
What are the potential speed bumps or opportunities we should keep in mind?
Definitely. On the opportunity side, you've got that big enterprise market push. International growth still has a long runway, expanding financial services further, leveraging AI more deeply, and cracking that B2B commerce nut. Lots of potential upside.
And the risks.
Well, competition is always fierce in e-commerce platforms. An economic slowdown is a major external risk. If consumers pull back spending, Shopify merchants feel it, and then Shopify feels it.
Makes sense.
Then you've got things like foreign exchange volatility, potential regulatory changes impacting e-commerce or fintech, and of course, cybersecurity threats are always a background concern for any platform like this.
Right. Standard risks for a global tech company, essentially.
Pretty much, yeah.
So, wrapping this all up, what are the key strengths shining through from this Q1 report, and what are the main things for, investors or observers to keep an eye on?
Okay, key strengths. Definitely that exceptional revenue growth combined with really strong improving profitability. That free cash flow and operating income jump are major positives. Robust GMV growth shows the platform's health, and the solid balance sheet provides resilience.
And areas to monitor?
I'd say keep an eye on that continued mix shift towards merchant solutions and what it means for overall gross margins long term. Watch the growth rate of those transaction and loan losses relative to the financial services growth. Obviously, monitor the impact of the broader economy on merchant sales. And keep tabs on the competitive landscape, especially in that enterprise segment, plus any significant currency swings.
Got it. But overall, the message seems to be one of strong execution.
Yeah, I think so. As Harley Finkelstein put it, they showed they can deliver both growth and profitability at scale. It really underscores how valuable their platform is proving to be for businesses, even in, let's say, changeable market conditions.
That's a great summary, a really clear picture of Shopify's Q1. So here's something for you, the listener, to chew on. Given Shopify's increasing reliance on and success with merchant solutions, payments, capital, etc., how do you think the fast evolving world of financial technology and embedded finance might shape their competitive strategy and ultimately their long term profitability in the e commerce space?
Interesting question. Lots to think about there.
Definitely. Well, thanks for joining us for this deep dive on Stock Talk. We'll catch you next time.